Hi, I'm Naveen Kulkarni. I co-head the research at PhillipCapital. I cover consumer, telecom, and strategy here. And the takeaways that we had from the PhillipCapital Ground View conference, where we do the check on the ground realities. So there are two themes which we discussed at length in this conference. One is the buzzword in the market, which is the rural theme, and how it is going to impact the consumer sector and the consumption sector. What we could understand from the panel discussions and from the participants is that uh, there is a bit of a beat because of the rural markets doing well, but from a market perspective where the stocks are right now, I think they have pretty much factored in the positives. Secondly, what we are seeing is that from a market perspective, there has been a run up in valuations for these consumer names, and what we are able to understand from the conference and interacting with various participants who do work on the ground, which is essentially channel partners, dealers, distributors, is that this year is going to be a challenge in terms of achieving nominal growth rate. Volumes will be there because of pricing deflation, but nominal growth rate is going to be a challenge. Valuations having run up ahead, the consumption or the consumer stocks see limited upside from current levels. So stocks like Hindustan Unilever, Asian Paints do not have much upside from current levels. So they are going to face challenge in terms of delivering decent numbers. From the perspective of whether rural is going to help them, it will help them a little bit, but it's not going to be a big driver for these stocks. So that is one a theme which clearly emerged from the conference. Apart from rural, what we are also able to understand is that we had quite a few cement companies in the conference. So what we are able to understand from interacting with various cement companies is that there was demand revival in the first quarter of this calendar year. Now things have been a little tepid, but over the medium term, demand is going to be reasonable. Pricing will follow, and some of these stocks will deliver reasonably decent returns over the next 1 to 2 years. So our top picks like Ultratech or JK Cement are going to deliver decent returns to the shareholders. So that was another theme that emerged. Apart from that, there is a lot of interest that we saw in the conference with regards to the bankruptcy code and how it will help the banks. Apart from that, there was a lot of interest in the digital disruption which is happening in the BFSI sector. What we are able to understand and learn from the various participants in the conference is that the digital disruption which is happening is also going to be collaborative for the financial services industry. It could also bring down costs, which is going to be helpful in making the cost structure leaner. So it's not just the disruption which is going to impact negatively. There are a lot of positives which are emerging, and players who are able to adapt to this digital disruption are going to be the winners going ahead. Of course, the private banks stand to do better than the others, but also we see that some of the other banks are also trying to adapt to this new paradigm shift which is happening. Apart from consumption and the banking sector, in telecom also we had interesting takeaways. We understand that telecom, there has been significant derating which has happened over the last 3 to 4 years, but with in the current scenario, players like Bharti and all have got sufficient spectrum. They can grow the market. Introduction of Reliance Jio in the market with a device-led model is going to grow the market from here on, because that's going to be the key. The key driver in the telecom market is going to be the shift from feature phone to smartphone, and overall telecom sector is poised for growth. That is one of the key learnings that we had. And essentially telecom stocks like Bharti are very well positioned to take benefit of the growth which is on offer from the telecom sector. So banking, we came out with positive takeaways. Consumer, it's mixed bag. Discretionary, there is positive. Staples, we came out with negative takeaways. For telecom, we came out with positive takeaways. Cement, we came out with positive takeaways. Overall, from a market perspective, we came out positive from the conference. Apart from that, interacting with the investors, what we learned was that from a valuation perspective, people think it is a bit stretched, but The positives of introduction of GST and other factors are yet to be factored into the price, and there is sufficient headroom for earnings to surprise, because earnings have been down for a while now. Maybe this year or maybe next year there could be surprise in earnings which cannot be ruled out. From that perspective, valuations will start appearing more sanguine. So overall, the takeaways were fairly positive. There is interest, lot of interest in mid-cap space, especially in areas like specialty chemicals, areas like cement, and in the areas of the banking. Areas where there is a lot of interest but valuations are stretched are the spaces of consumption stories. I guess overall from the conference was roaring success for us, and the positives have emerged more than the negatives.